Hello again, traders, and welcome out to your currency recap. This is Sanket here, and let's begin our market coverage. It's a Tuesday, October the 10th. Let's get into today's market recap. Take a look at what happened in the markets overall, see how the overall news is really affecting the markets, and take a look at our currency baskets and talk about the best trading setup in the next 24 hours here. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So overall, markets has been extending the gains. We have seen that rally on Friday, and we've seen that continuation Monday and now Tuesday. The US dollar, on the other hand, extends this slide. So overall, the dollar has started to weaken. And the bond yields also went sideways. So our bond yields pulled back yesterday, and the price action today was in a range. But what we are noticing is that the yields were not spiking as it was a couple of weeks ago. So seems like there's some sort of stability in the markets. Volatility is a bit lower. And this is again where we are seeing some rotation happening. So if you take a look at the performance today, you can see that it was not a spectacular day overall in the markets. You can see that in percentage change, everything was below that 0.5% mark, which again is not a big day. I mean, take a look at Swiss franc, almost flat. The biggest movements were really between the dollar and the yen, comparing that against the euro, pound, and even the kiwi. Overall, outside of that, this again was not the date that we want to be really active on. And looking at the week ahead, there's a lot to go through as we shift our focus to the economic data. Again, that's really what's moving the markets here. Looking at the broader markets, you can see S&P up 0.52%. So is the World Stock Index. Look at the bond yields. It had a big drop yesterday and has a slight update today. So overall, the bond yields are a little bit under control here. Crypto markets, again, back and forth, not a whole lot of consistency there. The gold markets did sort of had a flat day. Again, had a big day yesterday, a flat day today. And the oil markets are not giving any spikes, considering escalation in the Middle East with the Israel and Palestine situation. But so far, not a whole lot of impact on the markets and in the oil markets. Now, crypto markets, you can see pretty much it was a sideways to a flat day. The big movement really was in this Litecoin on the upside and Bitcoin to the downside. But overall, I remain interested in the crypto markets here. So let's take a look at the market outlook and see where we are at. So if you take a look at the chart on the markets, we are still in this bear rally bull. This was a big support that we broke, and then we actually reclaimed that area. Notice a day like today, we almost gave half of the gains that we had seen earlier today. So a bit of a weaker close. We are still in this weaker pattern here. This is still a bear rally. What's the next shoe to drop is the economic events this week, especially the inflation numbers, the PPI and the CPI. That could either derail this market pretty quickly if that number comes out again inflationary. If that number cools down, we can easily see this spike up as well. So where we are, I think it can go either way. This is pretty much data dependent right now. So looking at the schedule, this is where we need to get a little bit more active. Look at the Monday and Tuesday, it was nothing on the schedule. But starting tomorrow, we have the PPI tomorrow at 8:30 a.m. And on Thursday, we had the core CPI from the US. Again, this number will either reverse all the moves that we have seen so far since Friday, or just extend that move. I think where we are right now, it can go either way. Inflation, again, still a sticky situation. If that number comes out at or above expectation, we can see those yields spiking back up again, and the dollar kind of goes with it. But if that comes out weaker, we can see some of the yields back off, which will result in equities rallying and the US dollar pull back. So it'll be interesting to see. I think we'll have a good move either way. So that will be the time to be active. So let's take a look at currency analysis and focus on the velocity scores.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at the velocity scores, you can see that it was a pretty mixed sort of bag here. Dollar and yen continues to be on the underperforming side. Canadian dollar, euro, and Swiss franc are kind of in the middle. And the only thing that's really out there standing out is the Aussie and the Kiwi. The scoring system looks good, but percentage-wise, not a big mover. So again, we'll have to see how the news impact the currencies on Wednesday and Thursday. But again, that's where we can see some bigger moves coming ahead. But keep in mind, this is what we're dealing with. CAD European currencies were the best performer. They pulled back, had a bear rally, and they're kind of in the holding pattern here. So the dollar is really the one that's extending the slide from last week. So let's take a look at possible trades ahead and talk about the setups. And before we jump into the setups, let's just take a quick look at the dollar. Remember, the dollar has been the best performer throughout the last couple of months. So here we are pulling back. We have given up the 20 moving average, but we are still have a good support right here on this chart, which is right around that 50-day moving average. So that's again where we can find a possible support. But if we can give up this level, we can easily kind of roll over from here. You got to just remember that that's really the first initial line of defense here, and that's really where we can see some sort of bounce coming in. But for now, if you take a look at a top-down analysis, 4-hour chart looks weak, hourly looks weak, and 15-minute looks weak. So for pretty much from all time frames, it looks weak. So this is where we have seen that rotation. The dollar is not the best looking currency as it was just 2 weeks ago. Along with the bond yields, if you take a look at the bond yields, they are also sort of looks weak here. As we talked about in the currency room, we are seeing some exhaustion here. So you can see it had a big move down yesterday, had an inside candle today. So again, this is where we are seeing more weakness, more failed rallies, and that's exactly what you need to see in sort of a change of that trend. So you can see right now we are above the 20 to 50 moving average, making a bit of a base here. If we break lower, we can actually see a further continuation. So really the tomorrow and Thursday will be the deciding factor where the dollar goes and where the equity goes. So it's pretty clear where we are. Now let's take a look at some other currencies as Swiss franc. Let's take a look at the daily chart. Now this thing you can see we had a nice drop, and this looks like a bear rally to me. And so far you can see it's just stalling right at the prior support, which is now the resistance. So this still looks like a good short candidate for me, but I just need to see a real rollover yet, but not really seeing. The last 2 days were pretty anemic here. So next 48 hours, this goes on the top of the list as a possible currency to trade. And euro, you can see it had a bounce, but it still kind of looks weak to me. Now the British pound is also in a holding pattern here. So again, the best performer that turned weak, they're just in this bear rally formation, along with the CAD. Take a look at where the CAD was, how good it performed in September. It has rolled over. It's just in between the 20 and the 50-day moving average. Once it breaks below this level, so let's just draw the line over here. If it breaks this levels below that, then I would be shorting this. But for now, I'm in a holding pattern here. So all these little bear rallies that we are seeing, they are on the watch list, but we're not ready to pull the trigger yet. So let's see what's running here. So Aussie is also not running, but you can see this is a giant consolidation area. This will look interesting once it breaks out above this area. You can see that in the past, how we can go into the consolidation, and then once you start to see buying coming in, that's where you really want to jump on. We're not seeing that. So the only currency that actually looks good as far as the technical goes is the Kiwi. You can see that Kiwi, this has been downtrending for the most part this year. And now here we are breaking out above it. So overall, the price action still looks good. So I think the one currency that looks good on the long side is the Kiwi. So let's take a look at the pairings. Kiwi, let's start with Kiwi against the US dollar. As you can see, beautiful little setup here. We're turning around here. So depending on, the outlook, we got the Kiwi on the long side. What do you want to pair with? So Kiwi dollar, that looks like a decent setup, just turning around. We can take a look at Kiwi against the CAD. Same thing, turning around. Kiwi against the Swiss franc. This is again a nice little reversal pattern here. So you can see how this thing has been mostly trending down. We broke above it. And now we pull back. So for this one, if it breaks above this area of a 54, 97 above 55 area, I think this can easily climb higher. Remember, this has been depressed for the most part and since last year. We can also take a look at Kiwi against the Euro. Kiwi. And we'll see the same similar pattern here. So you can see technical setups are there. The question is the catalyst. And that's really where we get the energy in the markets. And you really want to trade with the energy. There's a lot of dull moments in the markets where it's just better to stay out. Keep the eyes on the watch list. Keep an eye on the price action. But there's no reason to pull the trigger until you start to see things move. And again, we have our setups here. I would really wait for the economic events to unfold, the CPI and the PPI tomorrow. And those are the ones that I will be paying close attention to. Lastly, if you take a look at the dollar yen, this thing is just holding off by that 20-day moving average. So far, not a whole lot of divergence between dollar and the yen. Again, dollar is just not looking good as much as it was before. It's pulling back here, dollar Swiss franc as well, and even euro dollar. So the really big question is that, is this a bear rally, or is it just a short-term bottom and we're just going to go higher from here? I think that's where you have to take a look at these technical setups, and they continue to push higher. It means it wants to go higher. Kiwi is a good example, as, despite all the noise in the markets, it's pushing higher. So that means that that's where should be trading against. In that direction. So trend is your friend. Always remember that. Now, in conclusion, I will be focusing on PPI. That will be tomorrow, and most importantly, Thursday, the CPI. But meanwhile, focus on the momentum. Play relative strength of weakness. Don't overtrade this market. These are not the most volatile markets. These are slow-moving markets. Handful of things are moving. So make sure you're trading those, and then just avoid the rest that's not really moving. Thanks everyone for joining. Have a good rest of the evening. We'll see you next update. Cheers.